Boy, and I'll be your host for this evening. So, once again, good evening, everyone, and welcome. On behalf of the organizers, Tikula Tech, I'm delighted to welcome each and every one of you to today's webinar, which is our first webinar of the year, which is titled Tech Startups Getting Investment Ready. Thank you for taking the time to join us for what promises to be an insightful and practical conversation on positioning our startups for sustainable growth and investment. Across Zambia and the broader African region, we are witnessing a powerful wave of innovation. Brilliant founders are building solutions in fintech, agritech, health tech, edutech, and beyond. But innovation alone is not enough. To scale to compete globally and to attract serious capital, startups must be structured, transparent, and investment ready. That is what today's session is about. Just to give you guys a little insight of what Secular Tech is about for those that are joining us for the first time. Secular Tech is a dynamic community a dynamic community organization with a mission to bridge the tech gap in Zambia. Our work revolves around providing accessible tech lessons, developing software and hardware solutions, and promoting tech education and innovation. We believe in a world where every young mind in Zambia has the tools to turn their ideas into impactful solutions. Our vision at Secular Tech is very clear. Our vision is to bridge the digital divide in Zambia by providing accessible tech education, fostering innovation, and empowering individuals and communities through technology. We aim to empower Zambia to build a future driven by technology through innovation and education. At Tikula Tech, we have three focus areas, which include education and training, community engagement, and open source projects. Today, we are more than honored to host Mr. Nicholas Kabaso, who is a distinguished corporate leader with over 15 years of experience in banking and capital markets across Southern Africa. As the CEO of Lusaka Securities Exchange and the Mandela Washington Fellow, Mr. Kabaso has been instrumental in strengthening capital markets and creating bridges between local enterprises and global investors. His work reflects a deep commitment to ensuring that Zambian businesses, especially tech driven ventures, are not just innovative, but structured for long term success and international competitiveness. This evening, he will guide us through practical strategies for formalizing governance structures, strengthening transparency and accountability, building investor confidence, avoiding common funding pitfalls, as well as positioning startups to attract both local and international investment. So, whether you are an early stage founder, a scaling entrepreneur, an investor, or an ecosystem builder, this session will equip you with actionable insights to move your venture to the next level. We encourage you to stay engaged, take notes, and prepare your questions for the Q&A session towards the end. Without further ado, I would like to welcome Mr. Nicholas Kabaso.
Hi, good evening. Can you hear me?
Yes, sir, you are audible. Good evening, sir.
Good evening. Sincere apologies. I was kind of caught up in traffic. I just don't know why the traffic was starting from very late in the evening, and I couldn't just make my time as I was rushing through it. I heard some part of your introductory remarks. I'm not so sure whether the floor is open for me to begin, or there's supposed to be some other sort of preliminaries that we're supposed to look at.
Thank you very much, sir. You're free to begin with your presentation. If you're ready to go, we're good to go.
All right, thanks. I'll straight out go to the presentation. First and foremost, just to apologize for having logged in pretty late. It's not by design. I must have been here much earlier. However, I think I was caught up in unforeseen occurrences that could not make me, log in much earlier on time. That being said, I appreciate so much for the opportunity to be able to speak to the audience. Appreciate also to Tikula Tech Foundation for allowing me then to be able to speak to your members. The topic at hand is quite very close at heart for me by virtue of the fact that the exchange obviously has had a very huge steer towards trying to develop the market in all its different sort of space. I think one of the few things that we must be able to state we have not done very well lately as a market has just been how do we get to engage ourselves in terms of being able to appreciate, the sort of space of, raising capital. I think the exchange for the longest time has been one that has been viewed from a spectrum of only the high end, businesses can approach the LuSE or even just any other funder to be able to get to raise money. I think the recent success story we have had for .com opens up a very useful narrative that everyone can be able to raise money. What's important is how investors you are to be able to tap into those pools of funds. All right, that's fine. So let's get straight into it. So tech startups getting investment ready. Obviously, I'll not speak much about who we are as a LuSE. It's pretty much what we are. We connect ideas to capital, and that's pretty much why the team thought it would be best for me to be able to speak to this audience about how we can then be able to raise funding as tech startups. For the longest time, like I did mention earlier, the LuSE has been focused on more the blue chip and medium to large cap sort of businesses, but the recent entrance of Zambia has literally just rewritten history. We are open for business together with even startups or whatever size of the business you are. We are more than ready to be able to help you to be able to meet your prospective investors. So that's pretty much about what we do at the LuSE. And I think that's the reason why I'm very glad to be here to speak to you. And I'll just get straight into the difficult challenge that we are facing in this particular audience. So where is the bigger problem that we are seeing from the perspective of startups and how they can then be able to scale up for additional capital? I think the biggest problem that we have been getting to see from the market has been mostly governance. And I've loved the fact that this particular discussion has been anchored on improving governance for us to be investment ready. So many SMEs and startups and other businesses that are trying to get to market and scale up, the biggest problem we're facing for most of them is that they're not governance ready. And this is mostly around issues to do with the formal board structure. Many of these businesses also have got a very huge founder denominated syndrome. And obviously in terms of, blurring the lines between personal as well as business finances, that has also been quite very, topical in most of the businesses. I think we have gotten to see some of the recent few cases in the market where individuals confused, business funding for their personal finances, and then they were being able to taken on by the other partners because they were actually abusing finances for the business, mistaking that for personal funds. So again, that's also one of the biggest problems we're seeing in most businesses. You start up a business, your personal finances are as good as your business finances. And oftentimes, this has been the biggest problem I've been facing with most businesses, especially smaller ones, to be able to let them be able to meet up capital. The other challenge that we've been able to notice across most of these startups as well as other smaller businesses has been inadequacy around your legal structures. Many of us have got ideas, have got something that is operational, but legally some of these particular structures that we have are not in any way covered by any legal backing. And again, these become a bit of a problem for us to be able to get to help it find, our finances, primarily because funders are looking for a better structure. They're looking for protection of their rights, and they're also looking for protection of their investment. So it becomes quite very crucial for you to be able to put your house in order at any given point in time for your business to be registered. And even as you are starting up, you must have a basis on which you can then be able to say, I'm the founder, and this is what my business was registered to do. I think the other problem that we've been seeing around most of the startups mostly has been due to lack of scalability. Again, are we able to see beyond 5 years of these particular programs, or are we just having a fantasy of an idea and And if we put in funding, that particular funding will just basically go into the pockets of an individual. So the lack of scalability has to a very large extent affected most businesses to be able to raise funding. So getting back to where I was on the bigger picture, we tend to see that a lot of businesses are struggling to be able to let go, the mentality trying to make money quickly and growing the business. And what happens eventually, the fact that is failed to be able to investors, also unable to impress, funders. Oftentimes that has been the unfortunate for most of the businesses. If you had to ask me, be the top 4 challenges perhaps as well as smaller businesses are facing, I would just summarize them in what we have presented on the screen. Most of them are fighting governance, gaps. A lot of them have got inadequate legal form. And then most of them do not have scalability systems in place that if we fund them today, they'll be able to live beyond the medium term. And then lastly, we tend to have a huge problem with founder syndrome, where oftentimes individuals want to make money even before they build business. And that oftentimes becomes one of the biggest bottlenecks for you to be able to create investment. Really move on to something to think about. It's very important for startups to be able to think about, a particular statement by Carl Trader. He there says that foresight is not about predicting the future, it's about minimizing surprise. And in this case, it's about minimizing risk. There's no investor that is just going to give you money for the sake of just to blow it all up. Most of these investors are looking for, businesses that can then be able to bring back other value. For looking at business can then be able to develop the effort of the investment. Individual startup founder, it's very prudent for you to get to see that for you to, it's not just about what your business will do, but importantly, it's about how you minimize surprise, how do you minimize risk, because the risk that you might not be able to and you may not be able to meet it is what is likely to bring down, and businesses that have come up quite quickly and have gone down very fast as well. So if you look at that, something that you need to be able to note as founders, that investors are attracted when we identify and risks and make our revenues more predictable. And we want to be on your side to be able to clap for you as you start up your business, because our aim is to see you grow beyond where you are today. So if your revenue line is very predictable, it actually becomes very attractive investors, and primarily because you're mitigated and then identifying some of the risks to be in your business. Now, how do we then get ourselves investment ready? Going back to the statement of the topic that we're looking at, how to be able to refine challenges into open, and therefore, how do you then get yourself to be ready? Number one, pretty much divorced board governance. The aspect of good corporate governance can be divorced from a business that is attract capital. So you must be able to build even very best, competent board of directors. Oftentimes, you have to pay a board of if at all you're starting you can even bring in colleagues, friends, those that you can add value to you as you get onto your journey of getting to grow your business. So this can be on a pro bono basis. Just ask colleagues that are willing to support you to sit on your board, and you need to just be able to make sure it's a routine for you to be able to have quarterly meetings that can then be able to discuss the health of the business and anything else that potentially, regulators as well as funders may be wishing to get to find out what you're discussing. So good corporate governance is very key. We cannot divorce a good business from good corporate governance. And I think that's also where we kill aspect of the founder syndrome, because then he's going to have oversight by an additional body, which is called the board of directors. I think the second way to get your investment ready is a need for you to formalize the legal foundation. Oftentimes, we get into bed with some people and we are not prepared to be able to, legally support what we're doing. Whereas our colleagues on the other side, they know what they're looking for. And if they know we are vulnerable legally, they'll take advantage of this. And those are times when we get to hear people losing their shareholding, or they didn't get to see what they got themselves into, and eventually they lose their business properly because the individual came in had more, power, and therefore they displaced them, from their seat. So defining your shareholder right becomes quite business to be registered with PACRA. If you're dealing with any technology sort of innovation, it is always imperative for you to be able to go to PACRA and patent what you are doing. I had a very unique case last time, also showing the colleagues in this room, me saying, look, I've got a bright idea. This is what I'm doing. The first thing I ask that particular individual is, are you registered with PACRA? Is your idea patented? How do I safeguard my interest? Even if I'm going to support you to run behind your idea, how much are you going to protect my reputation that you're not just falling around someone else's idea? So it is very important. You're setting up business, protect your idea, patent it. And that's the reason why PACRA is there. Don't encourage your idea. Even when you know you're kind of weak, no one else has got legal protection over what you're saying. Because the moment it goes into the main domain and people get to realize that you don't have a patent on what you're doing, and then they go and register that very patent on your behalf, you get to find that you lose everything else you have been doing. You might even be in prison despite being the owner of the idea because you did not protect the patent and someone went behind your back, protected that particular patent. Then you do now fraud. You fraud on the market because you're parroting else's idea. So it's always very crucial that legally we make sure that our businesses are sitting on very firm legal. That can crumble your business. It can actually even bring you into very tough times. You can go from being a hero to being to just being as kind of your business can literally nothing, especially if you're found exposed. The other thing that you must be able to get to look at to be able to get yourself to be investment ready is the need to create financial discipline and transparency. Again, oftentimes we see businesses convince investors primarily because there's not. I want to business. I can't choose any. I ask you to give me a valuation of how much money you make in the next 5 years. You are not able to give me that particular projection. Or if we ask you to be able to give us how much money you made in the last 3 years, it becomes difficult for you to be able to do that. What has eventually happened for more businesses is that they don't even know what is the price tag on their business. Now, I usually use this aspect of price tag for obvious reasons. You cannot get in fundraising without knowing what you're worth. That becomes quite a huge pitfall. You're not likely to impress any investor unless you know what your worth is. And therefore, if you keep your records transparent, good financial records, that becomes which convince and what the price tag is. It also protects you as owner of the business because no one is going to take advantage of your price tag. They come to you and I'm going to give you 10 million for 100% worth of the shares. You will be able to get to say, no, my friend, you can pass. I'm not interested. Or you can be able to say, for 10 million worth of shares, I'm going to give you 10% company. Why? It's because you start on your business and for no one can then manipulate. And the beauty of investors is the more you know your business very well, easier it is for them to be due diligence and the easier it is to prospect execution in business once they come on board. It becomes very important to be investment ready, business, know your numbers, and be able to what exactly you stand your price tag. That we hope to be able to defend this against, if I can use that word for lack of better. And most importantly, it protects your turf because now you know your business very well. You know why you're in the market, how much money you want to be able to raise, and even be able to start now targeting individuals for what it is they're for. And all because of how the business is and you know it. Lastly, I must want to state, again, aspect of stability, have a very strategic and clarity around what we're doing. This particular case, as a business owner, if I asked you to be able to tell me what is your business worth in the next, say, 5 years, you must have a very strategic intent of what your business is. An idea today that you think you can be able to get rid of is another thing to be able to tell me what idea is worth in the next years. Having a very strategic direction as a business would truly be able to meet prospective investors that are willing and be able to support that particular team, that are also willing to be able to rally behind you, be able to market and because it's sort of manpower that should be able to lead. In this particular case, you also minimize execution risks. So you avoid, investors, having to waste a lot of time doing a due diligence on you, primarily because they already understand your thought process. They also get to understand the direction you're taking your business, and that will give them enough, reason to be able to value your business, and they'll look at what opportunities they'll be able to get once they get on board with that particular idea that you're giving to them. So you avoid wasting if at all you've got a strategic intent and clarity of what you're taking as a business owner. So these are the four sort of tweaks that just respond to some of the challenges that are highlighted at the beginning. Now, we must also be alive to the fact that, funding has got different sort of nuances, and some of these particular, arrangements speak back to the challenges we've highlighted and how you can mitigate the challenges. Funding will come in various ways. Funding may come at pre-seeding level, and these are basically where ideas are just being crafted and you want people to support that idea to come to fruition. Now, what are funders going to mostly look at? Obviously, this is not going to be cast in stone sort of procedure. Others may be willing to take a gamble on you, and they may not necessarily look at some of these elements. But for more investors to take a chance on your business, you get to see that there's structure behind your idea. There are also fundamentals, like I said earlier. You must be able to have these shareholder, agreements in place that also help you to be able to protect the investor and protect your business. Lastly, there must be transparency also in the business. Your book, basically your financial. Now, you must be able to that legal as well as agreements are the of you to be able to make sure your business is funding. Now, I say this because the example I even highlighted earlier, a colleague approached me saying, I've got an idea, this is what the idea can do, and I'm currently at test stage. The question I asked them is your idea patented? The only thing I was check there is legally, you really ready to get money from the market or from an investor and give you the money. What guarantee do they have that idea that you have is not a fraud? So if we put in place legal structures to support both your patent and also how you are structured as that will give a lot of comfort to be able to support you along your course of your journey. So regardless of how small the idea can be, it is very crucial that legally you back up allegation, claim, or a bright idea with a patent. Do not neglect the aspect of patent registration. It must be your fundamental, obligation as a founder of the business, protect your idea. We take this lightly in Zambia because maybe we've never been taken to task. These are crucial elements that all of us must be taking things, seriously. A good example we can give is a Coca-Cola, brand. When Coca-Cola brand was starting off, those were some of the battles they started fighting with some of their competitors because people started producing almost similar brands like Coca-Cola. The only way they could be able to protect the brand was to patent. And unfortunately, in the beginning, they almost that particular to their competition, just a voucher after it being something similar to what they were doing. Now, we're in a very small market, and some of these sort of cases may be far-flung or quite very fetched. But I think it's very important as individual founders of businesses or startups, do not neglect the legal structure of your businesses. If you don't have it now, I'll tell you for a fact, after this particular conversation, please, can you speak to a lawyer friend that you know to help you to protect your business, help you to create some shareholder agreements, to just put this in any eatable, funder will start looking at these issues. Even before they start interrogating your idea, they'll ask some of these as prerequisites to be able to ensure that they are safe with their investment. At seeding level, and you start getting a little bit more in terms of what investors are looking for, they'll ask for an advisory board. Like I did mention earlier, these can even be bono. They'll also ask for transparency around how the records are being kept. The reporting becomes crucial.
and compliance also very important. If we're in the text, there might be need for affiliation to a body that is going to be able to oversee this you're doing. Again, that brings in the aspect. So it's very important that we do not name into pieces because funder levels funding, they'll be looking for the sort of tick before they can give you. Also, head there is A funding, and this is where now it becomes more, technical, and we're getting to raise larger tickets in terms of funding. So again, you move from just having an advisor, move to a formal board. Particular case, these are listed again once again with PACRA, you pay your board in terms of who the board, the test and proper. In some cases, in cases where operating in a regulated space, they might put to board members fit and proper sort of measures. Again, in terms of what to be required, there is a funding because the ticket higher, pre-seed and seed funding start getting to be more complexity around the requirements. Now they'll be looking for audited funding. And obviously be looking at any expertise, depending on the scope of the work you're looking for, that you're doing, and also the scope of funding that you're looking for and to extent you want that. So again, some of these particular compliance crucial. They're looking for formal board governance. They're also looking for audited financials, and they're looking for some structures around how do we ensure independence of the board in terms of having a lot of around what is happening in your business. And remember, as you move from to seed funding, the ticket size is also moving up. And that's the reason why, if you look at the government visits, they're actually intensifying in number and also primarily because the risk is becoming even higher by virtue of the value at risk. The ticket size is high. The growth funding stage is now beyond Series A funding, funded development products, whatever you're looking at. We're looking and scale and start looking at technical governance requirements. Some of these particular requirements even touch on ESG mission, and most of you have been going through for markets, have been looking at integrating. So maybe at this stage, it might be this has scaled up a bit, and now you're looking for higher sizes. So then they're looking for how to integrate your social as well as your environment. The rest of the other sort of requirements to be somewhat standard. General audit report, your enterprise risk framework might just be things that you already have had in Series F funding, sort of requirements. But what investors will be looking for at a growth funding level, they'll be looking for how well integrated is your reporting. The pre-IPO funding, which is basically now taking yourself to even higher heights. At this particular point, you are now looking at how do I tap into the public funding. So the requirements at pre-IPO become even more stringent. We are looking for full corporate governance code within your business. We are also at how compliant when it comes to governance. Now here, more stringent into a wide base of investors, and over to protect investors and protect you, we must be sure that your business is compliant. Now, when LuSE, which is basically we're going to now start talking about IPO, we have two main boards. The main board, that is mostly for the large company and as well as medium to large. These are businesses that would have been in operation for some time. But we have got our board, what we're calling the alternative market, and that's where we're talking startups and smaller. At that particular level, the alternative, we try as much as possible to meet the requirements, because we know most are not necessarily able to meet most requirements of formal, corporate governance. As a result, we help you then to walk the path of formalizing most of these items, but give you a grace period of about years for you to put the house in order. We should be able to get to the market and raise funding, the basis start. Some of the gaps identified around governance, you'll then be able to clean them up over the 5 years. That being said, one thing that we must around is for you to become market, you must be able not the fact that your business is operationally stable, financially credible, legally compliant, strategically. Now, the reason why I stress this point, and gentlemen, primarily because some of these things are often overlooked, yet we're looking for. So funding that come like charity, funding that is going to be for strictly business. As a result, we must be able to ensure that we've got a good value proposition around our business. We are also financially stable. We also have legal compliance on our structure. And so the point to note, everyone also is looking for funding must always ensure to note that your business must be operational, it must be financially sound, it also must be legally compliant as well as strategically scalable. Now, I must be able to stress on the financial bit that sometimes businesses can be making losses, but they've got a very, strategic, scalability and every other boxes they tick. That does not necessarily mean that you cannot be able to raise funding. Because remember, at the end of the day, it's about what story you're telling us that you're going to be able to achieve in the next, even say, 3 to 5 years. And that's where your financial records become, important, and your valuation also become quite critical, and how you package your capital raising become also very important. So you having a loss position does not necessarily mean you can't raise money. It's about what idea are you selling. You could possibly be at capital, sinking stage, and therefore you may not necessarily be expected to make money, but then you've got a very useful and a good going concern business where you can then be able to convince investors that you'll be able to scale once you're provided with adequate funding into your business. So do not get discouraged when your businesses are making losses. They can actually be turned around, and much of that will depend on how strategic and scalable is your business in terms of your storyline between now and possibly over the medium term. I have to get now to raising money on the LuSE, and I thought I could just highlight this as part of the sweetener to our conversation. I don't want to talk more about loans because I know for a fact if you're a startup, getting loans is one of the few problems that is going to cause, more harm to your business, because your business may not yet be, sound to be able to start meeting those obligations of debt. Now, why I'm bringing in the alternative market, it's just to give you a sense that that's possibly going to be your roots that you're going to be able to look at for you then to the .com experience. You could clearly see where the funding came from for .com. It came from individuals just like you and me, and those are the ones who gave a lot of funding, and that particular IPO was oversubscribed by 114%. Now that just gives you a sense that money is good out there, but what we need to be able to do is ensure legally we're sound. Our shareholder agreements are in place and we're compliant depending on the business that we're doing. And we also must be able to ensure, depending on how much money we're raising, how financially stable is the business going into the future for us to be able to convince investors. Now, for the purposes of this particular conversation, I will not talk about the main board. I'll just stick to the alternative market, which basically now attracts, the startups, smaller businesses, and everyone else who is not as large as the other premium that we're going to be looking at on the main board. So for this particular, alternative market, what we look at as a primary, point of call for listing is that your business must have minimum turnover of 250,000, maximum turnover per annum must be 20 million kwacha. So within this bracket, we also are taking care of your startups. So if you're starting up the business, you can then use the alternative market. We can give you a consideration where you're talking about a minimum of 250, just in case your business is not yet up to that amount, but you still want to be able to raise money. We are able to give you consideration comes due to the market and raise additional funding from the market. So that 250 is just basically our guide. But should you then insist you want to raise money on the alternative market and you do not meet the 250 over in your business, we can still be able to look at that. Obviously, what that's going to mean is you may need to be able to get to see how much money then you can be able to raise, assuming that your turnover is below that 250,000 kwacha. In terms of the number of shares in issue, again, because you're going to go public, the requirement is for you then to be able to move from being a private company to being a public company. And in particular instances for the alternative market, our requirements is that 500,000 of those particular shares must then be issued out to the public, and that must equate to about 10% of the total shares that you have registered with our authorities. I will not stress the aspect of legal and corporate governance. It just goes without saying that, again, because you're going to be tapping into a wider pool of investors, you just have to be legally and corporate, governed as a business. Now, in terms of the amount of fees that are payable, there are no fees payable when you're coming to the alternative market. So it's as good as just coming straight to the market. You state what you want to be able to raise. The LuSE will not charge you any fees, neither will the SEC charge you any fees for your registration of your company. Now, what is very important again here, which oftentimes is overlooked, is why do you want to list your business? So there are several reasons you can be able to look at. First and foremost, the primary reason is because you want to raise capital, so that goes without saying. Secondly, you want to list your business or bring in more shareholders into your business because you want to enhance your corporate governance. There's obviously that saying in Africa that if you want to go fast, go alone, but if you want to go very far, then go together. So the whole point where you're bringing more shareholders is because you want to be able to enhance your scalability and longevity of the business. The third reason why you want to list your business is because you're looking for liquidity and exit opportunities. Usually for founders, for them to exit their businesses, and that's the reason why we bring them to the public market. So by you raising additional equity, it could be you're selling your stake and therefore you're exiting the business, or you may just be diluting yourself to maybe even 10% from 100%. So you have got a bigger share of the bigger pie, but you still have a smaller contribution to that pie, which becomes better than having 100% of the small pie. So the reason why you want to list your business is because you want to exit, or you want to be able to scale and therefore have a smaller proportion of a bigger pie, which basically now adds up more quantums to how much money you can then be looking at. Lastly, I think it's mostly about employee incentives. So if you have to look at why you want to list, I think the moment that your employees know that you're public, they can be guaranteed for longevity in their workplaces, but it also opens them up to additional offers such as your employee share options, which allows them then to be able to contribute to the equity through this particular unique option of them being able to get shares as employees. And that allows them then to be able to work, knowing too well they're not only working for the employer, but they're also working for themselves as shareholders. So these are some of the useful points to the public, and why you should also be thinking about bringing more investors into your business. You want to improve your governance, you also want to get capital, you want to look at liquidity and exit mechanisms, and you also want to be able to give your employees some incentive of some kind that will just allow them to be able to look at you to be an employer of choice. Why list also? We also are looking for growth opportunities for your business. You also might be looking for future fundraising, which becomes easier, and increased visibility for your business becomes quite crucial. And lastly, you're contributing to the overall economy because you're a public company and everyone else has got a share in your business. I'll move on quickly to when is the best time for you to be able to raise money or to list your business in the event that you're going to be looking for public shareholders. First and foremost, the best time to be able to list or bring your a business to the public market is whenever your company is ready. So it's not a forcing matter. You just have to be able to get to look at yourself. Will I be able to tick all the boxes as required by the listing requirements? If that is the case, you are then ready to come through and list your business on the market. And then obviously, it's very important for you to bring your business to the market when the market forces are suitable. We always say that it's easier for you to do IPOs when the economy is heating up, because that's when investors are ready to take positions in the economy and in the various sectors. So if the economy is heating up, as it has been lately, we have been seeing our economy has been growing about 4 to 5%. That is the best time for you to be able to raise capital because people are aggressive. They're looking for opportunities. They're looking for assets. The other time to be able to bring your business to market is only if you want to follow the government incentives. We have been pushing a lot of incentives for SMEs who are listing their businesses on the LuSE. If that comes to fruition, that will be the best time for you as startups to be able to raise money from the public because you may be able to benefit from a tax incentive where you do not have to pay for corporate income tax, and that obviously improves your bottom line. It also helps your shareholders then to be able to benefit. There are other sort of encounters such as seasonal timings. Again, depending on what the timing could be, you may be able to get to assess whether it's time for you to be able to bring your business to market, or is it time for you to be able to approach any of these private equity investors or even the venture funds, depending on where you are in your business cycle or just whether you are truly ready as a business. I think the most important point I must be able to stress is the first one. Whenever your company is ready, that's the time for you to start looking for investors. Usually we get to the market sometimes very prematurely, and we get to hear complaints such as, no, I brought in these people, but now they're taking me out of my business, or I tried to bring in this investor, but he has got no courtesy whatsoever. He's asking for for an arm and a leg. But it's all because you were not ready at the time when you went to the market. There could have been even more cheaper source of funding that you could have used before we can then be able to get out there. And I think something that I've noticed in our market is we're very good at running to DFIs. We are very good at running to private equity, individuals. We are also very good at running to venture funds. And oftentimes, for the many businesses that have tried to raise money, most of them does not end up well for the many that have been able to encounter within the market. Primarily, it could be because we did not time the fundraising quite very close to to where we are as a business, and we could have missed the cycle, and that potentially could have brought in adverse effects of what we're trying to achieve. I think in summary, as I conclude, many startups underestimate how demanding fundraising can be. Therefore, investors must always be looked at not as charity, individuals. These are also looking for assets to be able to get them returns. So investors don't invest in ideas only. They invest in bankable, risk-adjusted, and scalable cash flows. So as individuals, startups are trying to raise funding, don't jump the queue. Do the right thing today. Simply prepare yourself for fundraising and getting yourself investment ready. Some of the points I've discussed in these particular points must be very close at heart for you to be able to prepare adequately and be able to get yourself investment ready. As a LuSE, we're more than happy to be able to support you. We also have got advisors on the market that can support you. Those are your people that you're supposed to be able to tap into. Do not feel shy to be able to speak to someone who knows financials. Help them, let them help you to be able to value your business. Get to know the price tag of a business. Only by doing that will you be able to come to market prepared, and you'll be able to get to know what price tag is attached to your business. That way, you can confidently argue with investors. You can also confidently argue that your investment is ready, your business is ready for investments, and that you know what exactly you're going to give up as a result of whatever amounts of money you're asking for. So ladies and gentlemen, I think let me end there. It was quite mouthful, but happy to take any questions of interest that any of us would have had. Thank you very much.
Thank you very, very much, Mr. Kabaso. Guys, let's give Mr. Kabaso a round of applause. I think there was so much that we got to learn from his presentation. So we could jump straight into the Q&A session. I see we've already got a hand from Kasonde Kapoka. Kasonde, you can introduce yourself. After Kasonde, we'll have Kozile Musoni and then Moanga Nyambe. Thank you very much.
Good evening, everyone. Mr. Kabaso, thank you for taking your time. Love your work at LuSE. Very inspirational. LuSE was just meant for you. I'm a third-year student at Zikas U. Mr. Kabaso, my question goes to how a small business deals with corporate governance. How can a small business starting out establish good corporate governance? And how does a small business fight policy? Because what has been noticed is that the education system, tertiary also does not prepare small businesses for policy. You find you encounter laws that were never known. And when you now know them, you now need to do research because there are penalties for negligence of the law. Thank you.
Okay, thank you very much. Do I need to answer to each one of them, or can take the three together?
Okay, let's take the three, and then you could answer three at a go.
Thank you.
Question was Tony. Thank you. Question, thank you.
Good evening, everyone. Short introduction. My name is Dr. Soni. I am CTO at Orion Enterprises, and my question for you is, what are some of the recommended checkpoints that for to build a scalable system? Yeah.
Okay, thank you very much for your question, Sako. The next question is from Mubanga Nyambe. Mubanga, you could introduce yourself and you can unmute your mic and introduce yourself. Thank you very much.
Okay, good evening, everybody. So thank you very much for the conversation. It was extremely insightful. Hi, everyone. My name is Mubanga Nyambe. I'm a third-year network engineering student at Lusaka University. Thank you very much. With that being said, my question is more to the regards of the current policy landscape for tech. It's very challenging for us in the field to actually develop systems because the two common schools of thought as of now are both policy-driven or policy-informed, and the more non-policy informed, because we're coming from informal markets, and at least from an academic standpoint, we have a challenge in developing out of the constrained box that policy provides. And with regards to Zambia, it's a challenge to get feedback as to how these conversations that you clearly are having are really shaping the field for the developing tech space. Because right now we also have a challenge of backing good talent behind good ideas. The policy landscape in the country does not necessarily incentivize the best form of an aggressive tech space. And we can see that evident in the brain drain that we're currently going through as a nation. Not to say that that's unique to us, but I just like to see how we as a country are currently addressing that given the influx of capital being considered. Thank you.
Thank you very much for your question, Moranga. Mr. Kabaso, I think you could answer those three before we move on to the next two questions.
All right, thanks very much. So I think the first one was from Kalonda.
It was from Kasonde Kapoka.
Kapoka, sorry. Yeah, so Kapoka, thanks very much for your remarks. Very kind of you. Answering your question in terms of how do we support development of corporate governance in a startup environment. I think first and foremost, you cannot do business without appreciating the expertise of other people. That's one thing I would want to always mention, even for you who are starting out to do your own business. Do not think that you are the fountain of knowledge. Yes, you've got ideas, but that does not necessarily make you become the ultimate. Everything that you do is you only who knows. There's a reason why every organization has got departments. It's because a CEO is not expected to know everything. I'm sitting at the LuSE as a CEO, but obviously I'm not the fountain of knowledge. Neither am I the fountain of experience. I work with teams, and there's specialized teams that that support me to do my work. So I'm just using that as an example for you in your businesses. Do not think you have to carry every sort of burden in your business. Get to appreciate the reasons why there are experts out there that are handling certain sort of specialities. So if you have to look at your corporate governance, to your point, there are laws that are being enacted every time. As we speak right now, there's a new act of the Companies Act. Again, that basically means you have to be able to come to terms with what exactly they've changed and why they're changing those things. But if you are a tech genius, I do not expect you then to be a legal genius, because that may not be your core. Your calling might be to do development of software and anything else in those lines. So you must be able to humbly accept that. It's not everything that you will know. You know your space very well. And if you know your space very well, that becomes your asset. Keep that asset to your heart, because that's the only thing that can help you to be able to grow. But when it comes to corporate governance, institute measures where you can then get the corporate governance experts to support your business. So this is why you bring in the lawyers. So there are lawyers that are in charge of corporate governance or company law. So you need to be able to approach them and ask them, guys, can you help me to be able to read into this? Obviously, at an early stage of your business, this might be very expensive because lawyers don't come cheap. But that's where now you need to be able to get to see, do you have mentors who can then be able to provide you lawyers on a pro bono basis to look through some of the things that you're looking at? Because remember, this is a commercial transaction. So many of them should be looking for a compensation. But again, if you've got a good advisory board, you have also got a good mentor around you, those can be able to assist you to provide you a lead or maybe a lawyer who can provide the work on a pro bono basis. I think while Stu insists that even though you're a small startup, do not neglect the specialty, because that, like I said earlier, can bring you down to zero. You may have a very brilliant idea that can be a $1 billion deal or $1 billion idea, but so as long as your legal foundation are weak, it will bring you down to nothing. So it's very important you get to institute lawyers in your business. Most of you have had friends at school that you're doing, undergrad with. Some of them are lawyers. Approach them on a pro bono basis, my friend, assist me to be able to read into some of these things. The only disclaimer is that it may be very slow in terms of feedback because you're not paying them, but most of them will be more than happy to support you. And if you're very smart, these are individuals who start now co-opting into your structures as maybe additional shareholders. So you tell them, look, I'm an expert in tech, so I'll bring in my brains, but I want you to bring in your expert in legal. But we're not paying you for your knowledge and expertise. I'm giving you 2% of my business for the sake of what you're going to bring in. There's an incentive then for them to be able to support you. So that could be a clever way in which you can then go about building those particular systems of corporate governance and also ensuring you get quality for what it's worth. And then if you just go on the street, there are a lot of lawyers operating as lawyers admitted at the bar. If you don't approach the right people, you may not get the right sort of incentive. For me, I'll tell you for a fact, approach people that are qualified. If I thought these are your colleagues that are also practicing, approach them and ask them for a pro bono sort of assistance. If you can even give them 1% shares for the sake of them bringing their expertise, so be it. What you want to do is legally let your business be well-founded. So moving on to the next question from Musoni. Recommended checkpoints for us to be able to build scalable, points, checkpoints in our business. One thing that we must be able to state, I think in my presentation, I mentioned on the aspect of have a very clear strategic intent of your business. Now, if you understand the direction you're taking, it's easy for you then to be able to set your own milestones. Because if I know I want to get to 100 million, 10 million worth of a business, I know what exactly I'll need to be able to do to be able to get to those particular points. Now, why that question you're asking is very important is because you cannot be able to provide a clear price tag on your business if you cannot even know the direction you're taking. You're just literally now, moving in all different directions. But if your strategic path is very clear, you set your milestones. Within year 1, I should have done this. Year 2, I must have done this. Year 3, I must have done this. Now, the thing about a strategic plan is that it's not always going to be cast in stone. A strategic plan is always fluid. So that basically means then that even though you do not meet your first year target or second year target, do not feel let down. Always go back and reset. Possibly you may need to be able to look at some of the assumptions you set. They could not be assumptions that would subsist at that particular point. That basically means you need to be able to go back and reset your strategy because some things possibly could have moved against you. A typical example we can look at are things to do with if, for instance, you planned that by year 2, you'd have invested capital of X amount of dollars, and maybe at that point, your dollar rate would be at 15. But today, the dollar rate is almost inching in towards 19. That will potentially have thrown you off in terms of your projections. That should not discourage you because those fundamentals may not necessarily be within your control. So it's always important you put in place a clear strategic plan, and those strategic plan must have clear strategic milestones, and you keep on monitoring yourself against those particular milestones. Now, to avoid bias, because it's possible if I set my own targets and I'm reviewing myself, it's easy for me to be so kind to myself and therefore undermine or underestimate, where I need to be able to, keep myself up a bit for the sake of being able to do more with what I have. So it's always advisable at that point when you're reviewing a strategic plan. Maybe give it to your board. Let them also give you feedback in terms of how your plan is doing or what potentially could have gone wrong in your assumptions that you must be able to look at. The other way is to give it to your advisory board. If you're talking about an advisory board, let them be able to look through that. Then the other way to be able to review your plan is always have a mentor. It's always important for you to have someone to mentor you. So if you want to be able to grow, have someone who knows business very well. Let them be the ones to mentor you around how do you manage a business. Or if you're trying to raise capital, look at individuals who have been successful in capital raising, let them be very close to you. And most of these are more than happy to be able to share their experiences. Let them be alongside you. Those will be the people that will help you to check yourself. They can also help you to get to see where you need to be able to pull up in the event that you're just failing way below your strategic, milestones. That will be how I'll be able to, answer that in terms of what are the recommendations. Have a strategic plan, have milestones, review those milestones every semi-annual. Within the 5-year period, midway down, you must be able to review those. And to avoid the bias of yourself doing your own reviews, have other individuals to support you to review your plan. And those could be your advisory board, your former board, or just your mentor. Let them be able to help you to be able to get to, pass. The last question from Mwanga, the policy is not very favorable. I think it's a yes and no. We must be able to thank, the government currently. They've had a lot of steer towards trying to help us to move faster when it comes to tech. If you have to look at the recent field pronouncement, ICT is contributing about 5% of our GDP, and that potentially means then that there's a lot of steer towards let's get ICT to be able to power up the economy. We now have got the Ministry of Technology. Again, it was primarily because they want policy to be headed in that direction. Currently, I've been seconded to one of the committees that are looking at AI. So again, that gives you a sense that public policy direction is quite enabling. It may just be very slow in terms of traction, but we're moving in the right direction. One thing that we must be able to state is that all of our colleagues across the river, South Africa inclusive, have moved on. They're now looking at the fourth industrial revolution. We're now talking about AI. So we have got some leaps to be able to, to do. But one thing I can assure you is that the strategic intent for policy is to enable tech to be able to develop faster. We have seen that even on capital markets, the ones that are putting a lot of money in terms of investment is mostly AI, and these are obviously tech stocks. And I think from our perspective,
Hello.
Okay. Thank you very much, Mr. Kabaso. I think we will take 3 more questions. We've got a question from Malunga Mulenga. You can unmute your mic and ask your question. And then next up, we're going to have Nanakando Kasonde.
of ideas, what you're missing, and we can then help you then to get into the right corridors where where policy can then be able to enable you to grow. I think that's what I'll be able to say on the third question.
Excuse me, apologies. We're following you and network just crashed for about the last 30 seconds. Deepest apologies.
Do you want me to repeat myself?
Yes, please.
Okay, so I was saying that, for policy, if you're working in technology, let's not today, dictate the future of what you want to achieve. Do your part. If you're a tech genius, just continue doing your part. Do not think about everything else at a go. The rest of the other things will help you to support you. So just let us know if you need any support. If you need any sort of policy, formulation, we'll then be able to get your submission and assist you to open up, policy doors that can assist you with whatever you're needing. So I think my only encouragement to you is do not let today dictate tomorrow. Do what you do best, and that's this kind of developing technology. I think the rest of the policy framework, we might be moving slowly, but we're getting there. And I think that should not discourage you. Just move at your pace, and then the rest of it will enable you to be able to fly with.
Okay. Thank you very much, Mr. Kabaso. In respect of time, I think we'll take the last three questions. The next question being from Malunga Mulenga. Kindly unmute your mic and ask your question. Okay. I think we can move on to Nankando Kasonde van der Broek.
Hello, thank you very much for the opportunity and this very insightful presentation. It has been really helpful, particularly on preparedness on areas that I've been taking in terms of our own preparedness. I'm Nankonde Kasonde van den Broek, and I'm from Zanga African Metrics. I'm the founder and CEO. We are a people data and analytics business, and we help organizations in Africa measure work performance and turn people data into decisions that improve productivity and profitability. I was very interested in what you shared about the three areas of preparedness, the legal, finance, and governance. I wanted to just ask two questions. One is around any tips, because on the slide you showed, I think there's a due room or due diligence process and filing of documentation that can facilitate that. If you've got any tips for, managing your deal room effectively, according to the slide you showed on governance, funding type and governance prerequisites. And then my second question is, how do you navigate negative shareholder equity? So when you put in money into the business, I really appreciated what you said about, don't fear losses. This is how you actually, if you can tell a story around it over time with the projections, you can actually bring in more confidence. So I wanted to ask if there are any other tips on navigating that negative shareholder equity when you're presenting your financials to a potential investment readiness. Thank you.
Thank you very much, Nankonde, for your question. The next question is from Alinjavwa Sichela, and the last question is from Nyama Mutondo.
Okay, thank you so much. Thank you so much for having this meeting. Of course, it's going to be Mr. Nicholas, very insightful and also helping me picture myself in the near future. My name is Alinjavwa Sichela. I'm a computer engineer by profession.
Excuse me, Alinjavwa, could you please project yourself more?
Can you get me now?
Okay, you can proceed.
Can you get me now? Okay. Okay, and thank you so much, Mr. Nicholas, for the insightful presentation. I can see a number of things that I wasn't aware of. So my initial introduction was Mandela Washington computer engineer by profession, and currently pursuing my master's in information systems at CBU. With an interest in entrepreneurship, and this is why I had to join this particular webinar, because I was trying to draw some insights. I think mine is really not so technical, but also just mainly on the business side. Skills revolving around data analysis, programming, that's where my field is, and I would like to change those into business. But my question is, you mentioned how it's important for us to actually draw guidance from people that have expertise in the fields in which we would want to be in. How best can we locate mentors, people that can mentor? I'm for a mentor. Sorry, can you get me?
Yes, I can hear you.
Okay. Yes, I'm actually looking for a mentor, and I'd like some guidelines on how best I can position myself to get that to help me with my business. Thank you.
Thank you very much, Alinjavwa. We're going to take the last question from Nyama. Kindly unmute your mic. Kindly keep your question as brief as possible in respect of time. Thank you.
Thank you. I hope that I'm audible. Sorry, I hope that I'm audible. So thank you so much, Mr. Nicholas, for your presentation. My query is with regards to which African countries do you think have created a favorable landscape for startups, and how can the general public become better players with regards to investments? So the basis for my second question is, when I look at, let's say, regions of the world like the US, regions of the world like the US, and you see how there is people feel they want to take some form of ownership in the startups and build giants that in turn influence how the world is running. And I feel like there is a gap between people that have ideas that can, build a country, make it improve, and the people with the resources. So I'm wondering how can that gap be filled, and which people are doing it right in Africa.
All right, thanks. Thanks very much. I can respond to the questions.
Yes, you can, sir. You can go ahead. Thank you very much.
So I think the first one. All right, thanks. So the first one from Nakonda on tips on how do you deal with legal, finance, and governance, compliance in your business. We must be able to note around the structure of your business. And I think I like the fact that you already have a business that is looking at people analytics and improving, profitability of organizations. It must be very noted that if you have to look at any business foundation, your legal and finance, as well as your corporate governance, are critical. And these are just basically foundation stones that you need to be able to lay in your business. So even before you can call yourself an entrepreneur, before you can call yourself a CEO of an organization, you can only be called a CEO of the structure that has been put in place and registered. So I think I would want to mention that for you then to be able to maintain your frequency on, complying on some of these legal, finance, and governance issues, it's important for you to create structure within your business. Unfortunately, I must be able to state that for most of us smaller businesses, we may not necessarily have the luxury to be able to hire people across board in all these different spaces. So you may need to look at elements where you yourself as the owner of the business, you start now double-hatting in some of these roles. Unfortunately, areas such as finance, but you're not an accountant, you cannot double hat. Unfortunately, those you have to be able to let go to accountants. For legal matters, again, you may not necessarily double hat because maybe they may require you to have a lawyer who is certified. But I think any other areas, I think you need to be able to take a lot of the interest as an owner of the business to get to know what is required in governance, what's required in finance, what's required in legal. That potentially will help you to safeguard your business because you may not be paying an extra coin for things that potentially you can write. If you want to write maybe a deed of some kind, if I told you know the basics, at least you may be able to draft a deed, which you can then be able to take for professional review, and that professional review should not be able to charge you a lot of money. I think by doing those little things, you may be able to cut down the whole chain of who can do what, and also because the complexity of your business at startup stage is not very much is issues. Issues with compliance, risk management. There are a lot of templates online that you can then be able to download and just get to see what fits your respective business and then just domesticate those to your need. But issues do with financials, again, if you find a very smart accountant, they can even do that for you for pro bono, or they'll give you just a template that you can be using to fill in, and then they help you to provide the financials at the end of the year. I mean, at the end of the month, or at the end of the week, just for the sake of making tips of to be able to give you. I must be able to state, I'll send you the recommended book I read just I think last year. It was talking about how startups can then be able to manage their businesses. I think he provides a lot of value-add sort of practical examples in his book, even softwares and programs that can help you to manage your CRM, software that can help you do your marketing, software that can help you to be able to do the basic bookkeeping. So these could be things that you can use, and they're very cheap in terms of getting them online, and then you can then be able to domesticate them to your business. I'll send the book to the admin in terms of the recommended book that I read. Just for you, if you can find in Grey Matter, I would encourage you to be able to read that. It was a story about an entrepreneur who has been through a lot of businesses,
some successful, some unsuccessful, and he speaks from the point of, I'm a small business owner, and I'll speak from the vantage point of a small business. I'll not talk about the grand things about large corporates. So I think it also will help you to just read into what he recommends there and just what are some of the behaviors you need to be able to inculcate as a small business for you to be able to become successful in your business. The second question, how do you deal with negative shareholder equity? I think it's a very tough conversation if at all you're looking for fundraising. Oftentimes, businesses will be assessed on their valuation. And one of the critical pieces of that valuation is your capital. However, how then do you navigate where you've got negative capital? Remember, I spoke about do not worry about financials when they're in negative. What is important is what story you are telling. Now, in any given business, there's also what we call goodwill. And that goodwill could be sitting on your patent. Now, that is your asset. I may be starting up Facebook today. I don't have money because I've got a lot of compliance costs I'm incurring, and therefore my profitability is negative and my capital is eroding. But what is really crucial is what story am I telling to the investor of who I will be in the next 1 year once I clean up my capital position. That is where you deal with the negative shareholder equity sort of perspective, because you've got a value proposition, and it's that is making you to stand and wake up every day because you know you've got a business, you've got a service that you have to be able to sell to the next person. So the story that you package around what it is that you do and why you wake up every morning will help you then to be able to deal with, I don't have capital in my business and I'm looking for capital. The only challenge you have is you need to be very smart in valuing that goodwill that is attached to your patent. And that also means it is very important for you as an owner of the business to register your patent, because you can only value that which is registered and it's not fraudulent. Because if your patent is not registered and you're professing you've got this business and then that business is owned by another person, then even the goodwill attached to that patent may become eroded. So register your patent and also be very clever in the way you value that. And you can value it based on discounted future cash flows. So even though I'm negative now, what I can sell on my value on this particular patent is X. If I bring that X tomorrow today, this is how much money I'm worth. And that's where your valuation becomes important. You may have a negative capital position, but then if you discount the future cash flows on your business, you may end up having a positive valuation on your business. And it's that you're going to start selling to your prospective investors. So financials are just basically an accounting number, but then there are future prospects we're looking for, and that is a story you're going to tell when you go to your respective funders as to why you're then meeting them before them. For me, that will be one of the few tips I can be able to give you. Value your patent, register your patent, and ensure that the valuation is commensurate to what your business can definitely be able to deliver. By doing that, even though you're negative now, the future cash flows will redeem your face now, because you know I'm worth more than what you're seeing on my books now. If this particular business is cleaned up, this is what potential it has, and that is what you're going to sell to your investors. Moving on to the second question from Malinjagwa, how do you then locate mentors? I think you must be able to take advantage of such kind of gatherings. Even among yourselves, you can actually be peer mentors. So do not just think peer mentors as CEOs of well-established businesses. Even your colleague can be a mentor, because remember, we speak from different vantage points. My expertise may not necessarily be your expertise, and therefore I should be able to leverage on your tech experience to help me to be mentored in the way I should be able to perceive maybe AI, the way I can perceive technology, and everything else. Remember, I mentioned earlier, none of us is a fountain of knowledge. So we must be able to appreciate that even my colleague next to me can be a mentor. Remember, we're all speaking from different vantage points, and therefore do not, undermine the capability of your colleague next to you. You can be able to ask them and say, look, you're good at what you do, like the colleague who spoke about, people analytics and profitability. Already I see that being a mentor. She may want to charge you for the service, but again, because she knows your challenge, she may want to come in for bonus. She may not give you 100% of her time, but she can be giving you a piece of what she does best. And those are the sort of mentors that we look at. Don't look at the grand images. I keep on receiving in my inbox, I think in excess of about, say, 10 requests every month of individuals who want me to mentor them. I can only mentor so many people. So again, that's where you find the disadvantage of already profiled names. You may not get your satisfaction because none of them is free and can be readily available as and when you want them. But then take advantage of your colleagues with their expertise, use them. For me, those would be some of the mentors. In your failures and successes, you can then be able to help each other. And even better, because all of you are startups, you can also be able to encourage yourselves to move faster and in the right direction. Then the last question from Nyama, which country is best at trying to provide good direction for tech investments and also public investment into technology? I would say South Africa is, because if you look at the amount of capital that is pulled into Africa on a continent level, South Africa pulls in 90% of the capital. So South Africa, as we speak right now, is the biggest capital market in Africa. They pull in 90% of the capital that comes into Africa. It's all pulled in South Africa. That just gives you an indication of where the money is sitting. So much of it is sitting in South Africa, and we've seen a lot of businesses in South Africa, some of them by our own colleagues that have started up businesses and have ballooned to some very large businesses. Why? It's easy for them to tap into those particular pools of capital. I think where we need to be able to improve as Zambia is how then do we liquidate some of our pension fund capital to be able to start flowing into such startup ideas, because as things stand right now, so as long as our guidelines remain quite very restrictive to take the risk on startups, we may not necessarily be able to get to see the next big Facebook coming from Zambia or the next big fintech coming through from Zambia. Until those particular rules are relaxed, can we then be able to get to see that Zambian public investors are now taking positions on some of these startup businesses or just ideas that are coming through from the shelves, and we can then be able to fund. I think that's the job that we have to be able to do. And like I said earlier, I've been co-opted to sit on the AI working group. I think we'll be able to get as much of some of these conversations onto the policymakers to help us then to be able to liquidate capital that can flow to activate these ideas now to actual business environment. I think that would be my response to that last question. Unless there could be any other that I could have missed out that you think I can come back on. Thanks.
Thank you very much, Mr. Kabaso. There is one more question from somebody that got cut off due to network issues. I think that was, sorry, just 1 second. He's got a question. If you could just wrap up your question in the spacing of 30 seconds, all in your space of time, kindly do so. Thank you.
Good afternoon, good evening. My name is.
Give them to you. What channels?
My name is Malunga Timothy Mlenga. I'm coming from Calculator. It's a tech startup. So we developed an app that helps people to track real-time financial information on the capital market status, both on LuSE as well as Bank of Zambia. And right now we're at an inflection point where it determines if we are going to continue growing or we are going to go down. We have at least 20,000 downloads, more than 6,000 registered users. And considering every aspect, including what you've talked about with regards to corporate governance and having an effective and efficient management team, my question is with regards to the approach. How would you approach external organizations such as LuSE, Bank of Zambia, and SEC to be able to collaborate in order to enable the scalability of your app? Because this is an app that is speaking to each and every user, but we realize that we have to be dealing with B2B, business to business, in order to achieve a shared goal. And then the other question is, what are the chances that these institutions will be able to accept our product with regards to achieving the shared goal of increasing the absorption of capital market products, both on the primary and secondary market? That is my question. The name of the app is Calculator app. It's both on iOS App Store as well as Google Play Store. Thank you.
All right, thanks very much, Malunga. And I think it's a very good challenge. I think we must have spoken with yourself, I'm also sure, but it sounds familiar. I possibly could have given you a window for you to be able to present your case. I think I kind of relate to what you are saying there. How can you approach the regulators? I think you must also be able to take into account that regulators are bound by regulation, and most of them are bound by, a statute of the law. So if you have to look at Bank of Zambia, Securities and Exchange Commission, and even ourselves as a LuSE, we are bound by rules and regulation and even by statutes. How do you approach us? I think you've got a very brilliant idea. That much I can assure you. The best way to be able to do this is apply for a sandbox, application with the SEC. Let them be able to admit to the sandbox, try out what you're doing, give them the satisfaction that what you're proposing will work. Once you get validated from that perspective, that becomes easier for you to walk into the central bank, walk into the LuSE, knowing too well that you have been validated by the other regulator. So that way, you then be able to easily approach and let these doors open. And I say that because oftentimes we're working in a very sensitive environment in the financial sector. Credibility is all that we have in this particular market. Trust is everything for us. So for you then to be trusted, go through the sandbox, get to apply, let your product be tested. If fully validated, it gives you 100% ammunition. Walk into my office and tell me I've got an app. And I will not have to even have any second, check with you if you tell me I've passed validation in the sandbox, meaning the regulators told you you've got a product that can go. The challenge of you coming through that, passing through the sandbox, is that I start looking at you like you're just giving me an opportunity to try you out, which oftentimes, you miss the opportunity because you truly may have a valid product. But then we are busy people at times and also got very sensitive sort of obligations. If I admitted you under the LuSE and it so happens that your product has failed, one is market integrity. Then secondly, it's about the credibility of what we're doing as an exchange. If you have noticed, we've been battling with the current, app, partly because of some of these gaps that were overlooked at the onset. So if yours then can supersede the performance of what we have and you have passed validation in the sandbox, that will become easier for you to approach the governor and say, Governor, I've got an app for you. What makes you to have teeth to bite? The other regulators authenticated you and you're good to go. That will be the approach I'll be able to give you to be able to follow through if you have to be able to move quite fast. Can these guys be able to accept your second question? Yes. I think we are at a point where we need to support local entrepreneurs. We also must be able to support fintechs locally. I'm a big believer that if Zambia has to turn around 360 degrees, it's not FDI. It has to be our own SMEs. It has to be our own people. It also has to be our own brands that are going to turn us around. We continue to see how big, exploitation, if we have to look at, the mines, we do not own as much of the mines, and much of that, revenue, flees the country, and only we see the operating expenses coming back. But if we own some of these bigger conglomerates, that changes the landscape of what we're doing in these sectors. So I truly believe that we'll be able to accept your proposal, we'll be able to accept your offer. What is important, validate it, let it be validated through the sandbox, then walk into my office. I can guarantee you, once that happens, I will still give you the second chance to present to us and let us know how we can then be able to fuse your program within the bigger programs that we have for the market. For me, it's a big yes. The regulators will be more than happy to accommodate. There's no regulator that will push you aside. We all are looking for local brands to be able to help us to go to the next level. That will be my submission on the second question. Thank you very much.
Thank you very, very, very much, Mr. Nicholas Kabaso. I think that wraps up the questions for this evening. And from Tikula Tech, would like to say thank you so much for taking the time to speak to us and give us the insights that are needed on startups. We really appreciate it, and thank you to everybody else that has joined in this evening. Thank you for your time. Thank you for your questions. You guys have been a great audience. Yeah, let's not forget to connect with each other. You might find your destiny within the people in this meeting. So let's connect. Don't forget to join the Secular Tech WhatsApp community. The book that Mr. Kabaso spoke of will be shared to myself, and I will share it to the WhatsApp community. So don't forget to join. The link is up in the chat. And don't forget to follow our platforms on LinkedIn, Facebook, Instagram. Thank you very much, and enjoy the rest of the evening. Once again, thank you very much, Mr. Nicholas.
All right. Thank you very much. Hello to everyone. I appreciate the time. Thank you.